Hi everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, let's start with volatility. What's driving this surge in market anxiety?
It's been a roller coaster, and the markets are struggling to find direction. The VIX, which measures market volatility, just spiked to 25, a level we've only seen a handful of times in the past year. That tells us that investors are on edge, and for good reason. At the heart of this uncertainty is government policy, both fiscal and trade-related. One day tariffs are on, the next day they're off. We saw President Trump delay auto tariffs on Mexico and Canada for a month, but that doesn't remove the uncertainty for businesses or consumers. Then there's the German 10-year Bund yield, which saw its biggest one-day jump since the fall of the Berlin Wall. The bond market is reacting to shifting fiscal policies in Europe, but also growing fears that inflation could be re-accelerating. The takeaway? This market is being driven by policy swings, and that's keeping everyone, including portfolio managers, on their toes.
Next question, how are diversified portfolios handling this turbulence?
In a well-balanced portfolio, you're probably seeing flat to modestly positive returns this month. That's because while equity markets have been volatile, certain defensive assets have performed well. Gold, for example, is up around 1.9% this month as investors look for safety. European equities have also held up relatively well. Germany's increased fiscal spending is being seen as a positive for growth, even though it's pushing bond yields higher. On the flip side, the US market has been struggling. Small caps are getting hit particularly hard, down around 4% this month, as higher borrowing costs and trade concerns weigh on sentiment. Tech isn't immune either. While Nvidia's earnings were solid, they weren't the blowout numbers investors had hoped for, and the stock's performance reflected that. Crypto is also taking a hit. Bitcoin fell over 5% after the White House clarified that the US government won't be building a Bitcoin reserve. That's a stark reality check for traders who had expected government backing to drive a new leg higher.
And finally, what's the biggest theme to watch in the coming weeks?
Without a doubt, it's the shifting global growth narrative. Right now, the US is grappling with inflation uncertainty, policy-driven market swings, and a fragile economic backdrop. GDP forecasts are coming down, and the risk of recession is rising. Meanwhile, Europe is making moves to support growth through increased spending, which could make European equities more attractive going forward. Then there's China. Beijing just set a 5% GDP growth target, the highest fiscal deficit in decades, and a new stimulus package focused on consumer spending and infrastructure. If China can execute on these plans, we could see more capital flowing into Chinese markets, which have lagged behind global peers. Investors looking for opportunities outside of the US are paying close attention to these shifts.
That's it for this week. Stay tuned for more insights next time.